The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 8th, terrific Tuesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go look at the circumstances of these markets. What the bulls and the bears, the buyers and the sellers are communicating to you and I, at least as of 1:10 in the afternoon on the East Coast. And I want you to know that I'm absolutely grateful for your presence here. Now, I'm here to serve you. So feel free, pick up that phone, dial on in 877-927-6648. Internationally, 727-445-1044. Of course, you can email me, steve@tfnn.com. I'll do my best to check out your email and inside the Tiger's Den. Yes, go ahead and ping me or type in your message, and we'll try to get to whatever it is that you might be looking at on this terrific Tuesday. Doesn't look like Turnaround Tuesday to me, at least not just yet, but we're going to go take a look at that because there are some interesting charts for us to do that. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading off 151 points. She's trading at 17,579. S&P is down 13, trading at 2,064. NASDAQ Composite off 7 points at 5,094. Russell 2000 down about 5 points. So it looks like the NASDAQ and the Russell are outperforming the Dow and the S&P. Gold is off $1.80, trading at 1073. Silver's down 20 cents at 1413. Light sweet crude is flat at 3770. Natural gas to the downside again. Looks like a little bit of movement inside of high-grade copper. To the upside, leading the charge out here, it is AutoZone. It's up $35, 4.5%. Eagle Pharmaceuticals up 19%. That's about $16. To the upside, Alexion Pharmaceuticals up $8. About 4.5%. You've got Biogen is up, so the IBB, well, that's up. So there's your reason why the Nasdaq is doing so well. One of the reasons why the Nasdaq is doing well. So we got to take a look at that. That's up $5. To the downside, Chipotle continuing to take it in the shorts. With the problems out there that they are dealing with. I never cared much for the Chipotle food to begin with. Now, the mere fact that they're struggling with some type of E. coli issue out there just makes it all the more reason to not stop by. And, of course, that's what they are experiencing out there. So down 3%. But coming back, I believe we looked at it yesterday into a very large breakout area. Outer Wall, that's down 22% off $13. Intuitive Surgical, that's off $8.52. I don't know why it is, but whenever I see that name, just reminds me of the great Emerson, Lake and Palmer ELP album out there. Brain Salad Surgery. Well, that's not the name of the album, but that's certainly what it reminds me of. United Foods, that's off 17%. So we've got some fairly decent movers and shakers to the downside. But what's interesting about let's go take a look at the IBB. So I've been having system problems all morning long. So we've got this thing put together by Band-Aids right now. So hopefully there's not too much. So I mean, I just sat down in a seat about 3 minutes before onto the air. And the one thing that I noticed was the NASDAQ Composite. I'll come back to, first, what I noticed about the NASDAQ Composite, really what I was doing here was I had, my 4-panel charts, which you're familiar with. New York Stock Exchange, left-hand side, NASDAQ Composite to the right of that, Dow to the right of that, and on the very right-hand side, the S&P and the VIX Index. But what I noticed, you and I took a look at this yesterday, was I noticed that right now we've got a kiss and tell because I'm going to tell you about it. And that is that you've got the 50-day simple moving average. You and I, we typically don't look at the simple moving averages too often, but we do want to take a look at it now because you've got that golden cross that is in or getting ready to perhaps be in place today. If we take a look at the 50-day simple moving average right now, it's a green line on my chart. It's measured at 49.76. We'll round it up. And the 200-day is at 49.76. It's actually really 49.7570 versus 49.76.30. So the 50-day is just slightly below it. But it's getting ready. It's either getting ready to kiss and deflect and say, hey, you've got bad breath, so get the heck out of here, or it's getting ready to do the crossover, which says that there's a romance that is going on inside of the NASDAQ composite. Now, let's go take a look at the IBB because, and I wish I could tell you what the weighting structure was inside the NASDAQ composite. I don't have any place I can quickly go to. Maybe somebody knows that inside the Tiger's Den. But nonetheless, we want to go take a look at it anyway. So let's go look at the IBB, see what's going on here. And we've looked at the components, the constituents in it before. But let's just take a look at the IBB itself, try to figure out what's going on here. Let's just clean up this chart if we need to clean it up. I think we do. So let's get rid of the rising trend line out here. That's the yellow lines. But what is interesting, let's turn off a couple of these. Let's turn off the retracements. We don't need that here just yet. Let's just try to take a look at a simpler approach inside of the IBB. Now, I know the components inside the IBB. The question is what's the weighting structure of the NASDAQ biotech inside of the NASDAQ itself? You know, is it a 4%? Is it a 10%? It's not 10%, I'm sure. Well, I don't even know. It could be anything. I just don't know what that weighting is. But nonetheless, if we take a look at the IBB, and that was conversation going on between me and some of the Denners there assisting me, and I just wasn't clear on my question. But if we take a look at the trend line, so we know a couple things about the IBB. Number one, we know that there's this island top out here. I'm going to clean this chart up. We're going to clean up our palette because it's going to be a little bit easier to take a look at everything. So let's do that. We'll just turn things on one at a time out here. So the one thing that you and I know, we'll leave the volume out here. But one thing that you and I know is it's got this very bearish reversal pattern that's out here. So up at the top, at its all-time highs, it created that island top. That island top is really, it's right here. You know, you don't have to really look. We got to look kind of close to identify that there's still a gap in between the gap up and the gap down. The gap down that I'm referring to is July 24th. So you got that island top. Now, what we also know, it's just like the market, which really the IBB dragged the market to the downside. That was on August 24th, and it moved lower with volume of about 4.8 million shares. Now, that exact low really wasn't tested, but even if it wasn't tested, guess what? It wasn't the August 24th volume that was the big volume to the downside. It was the September 28th volume inside of the IBB. And that had volume of 11.8 million shares. And, you know, all that we can say at this stage, the low hasn't been tested, but the high has been tested. And the most recent high of that swing point, we're going to use that as a swing point, it was tested back here on November 12th. And it was tested with a lot less volume. It was 1.8 million shares testing 11.8. That was, you know, 90% less volume. So it's possible, just possible, that the testing of that swing point is done for the time being. If, however, we see the IBB get inside that swing point, mean any close underneath 303.31, it basically is telling us it's going to go back down and test the low. And the low there would be 286.51. Okay, that's one thing that we know. Another thing that we know is there was a trend line that was starting from the top of that island reversal. Really, its next touch point was out here on September 17th, a fairly important swing point day inside of the market. And what we can see is that the price inside the IBB broke back above that trend on November 18th. Whenever you break any style of resistance, horizontal, diagonal, vertical. Of course, there's no vertical resistance out there, but it just sounded good. Whenever you break a level of, and there probably is vertical resistance, I just don't have it on this chart. But whenever you break any type of support or resistance, this case here was resistance, you like to see price come. You may not like to see it if you've taken the long side of the trade, but you still like to see it come back, test that level, reject that level, and then continue to motor on higher. Now, we don't necessarily have that today. We have the test of this level, but we haven't seen any kind of sign of strength today. You know, we see that it's up with 1 million shares, and it was down with on December 3rd with 2.5 million shares. So It does not exactly like it has the volume behind the move. And maybe this is a move sideways. I don't know what this is out here that is going on. Let's add some market profiles. Let's see if our profiles can assist us with anything. And our profiles do assist us with understanding where there's some additional pièce de résistance. And that happens to be at the top of its daily market profile, which is priced out at 339.41. So that area is resistance. We can see the point of control, the little blue dashed line that is on our screen, or if you just take a look at the numbers inside the data box, you can see that the point of control, which is 332.69, is closer to the resistance, to the high of that box at 339. What's that tell us? That says, guess what? There are sellers that are lined up there just ready to sell into anybody when price gets up into that 339 to 332 level. That's what you want to be watching. If in fact the IBB can continue moving higher, the question is, can it overtake 339.41? What it really needs to do, if it's going to be a change in trend to the upside, which at this stage it hasn't proven itself, it's got to close above 342.89, and it needs to do it with volume. And the volume it needs to do it with is 1.9 million shares. Hey, let's go out to Massachusetts and speak with Mike. Mike, thanks for calling. Thanks for holding. How you doing today?
Good. How you doing?
I am doing very well. Thanks so much for calling. You wanted to take a look at Tesla. Tell us what you're doing and how I can help you.
This is Mike in Pennington. It's Netflix.
It's
right.
Netflix that you want to take a look at.
And I'm not in Massachusetts, but that's all right.
It must have. Oh, okay. Well, you know what? It must be another Mike that wants to take a look at Tesla. But for you, let's take a look at Netflix. Now, inside Netflix, tell us what you're doing.
Well, I bought a put when it was like 132.
Okay.
And I bought a second put when it was this morning, and when it was 123.50.
Okay.
And now all of a sudden, a couple hours later,
You're at 126.
You're at 126.
So here's what we know about Tesla. First off, let's take a look and see. Go ahead.
Netflix.
I'm sorry, Netflix. I'm sorry. I got Tesla on the brain. You must own a Tesla. That must be it.
My buddy does, but not me.
Oh, okay. No, I've never driven in a Tesla. What's it like?
I haven't been in it. I looked at it from the outside. I watch him wax it. He plugs it in. It's good fun. It looks highly technical inside. It's very, I see it's like a spaceship. It's very cool. Yeah, very cool car.
Yeah, cool. Let's take a look at Netflix, and let's see what Netflix is communicating to us. And specifically, what you and I are doing is the very first thing we're going to take a look at is that August 5th swing point. That's really one of our benchmarks to take a look at. On August 5th, there was volume of 26 million shares. And as price approached that level on December 2nd, 24 million shares, 26 million shares, 20 million shares, and then yesterday, 23 million shares. So remember, all that's going against 26. So, it continues to bang into that swing point with similar volume. Because you kind of use about figure if it's hitting it with 90% or so, it's hitting that level with volume. Yesterday's swing point, which you and I will talk about when we get back from this break here, that's really going to be the key benchmark for you to make a determining factor whether or not to hold on to your put positions inside of Netflix. So this is Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We're on the line with Mike in Pennington, and we are taking a look at Netflix. So, Mike, one of the things that I noticed inside of Netflix from yesterday, and I went back and took a look at the weekly chart, is yesterday is what's referred to as a key reversal session out there. Now, key reversal sessions, you know, they have more meaning when they actually occur when the market is stretched. I would use as a definition getting back to the old highs, you know, market that could be stretched here. What is also nice is that you've got that same reversal signal on the weekly chart. And that says that it's really key that now, of course, the week's not over. It's only Tuesday. So if for any reason there is a move above or a close above 131.19, that's the high of the week so far, then the weekly is not giving you that message whatsoever. If we do get a close just one tick below that level, then you at least have a key reversal week that's out there. Here's what you've got to be focused on. And the only thing that I can find that is going to give you a signal from the bearish side seems to be the market profiles. And there's a brand new one that just showed up today. And what you'd like to see to give your put position a glimmer of hope here, you'd like to see it close below 123.45. If you get that, then you know, maybe you're looking at price pulling back into about the 109-ish area. This had some decent volume on the trading day of November the 17th. the top of which is 118.79, the bottom of which is 111.70. There was 33 million shares. So you need to see Netflix pulling back with, 30, 33, 34, 35, something like that, share-wise. What was your target to the downside? What was your strike price?
Well, I thought I would go down to 120.
120. So okay, so then you're good there because but first you've got to see it. Yeah, I mean you'd like to see it close below that 123.45 level, and then then you could easily get 120 out there. But what else are you looking at? Because that was just really a quick view. Is there something else that you're seeing? Why Netflix? Why did you take the short in Netflix?
Well, I saw that it was made highs. All-time highs, and then I waited 3 days, and then the market, I think if the market pulls down dramatically, the longs will want to get out of Netflix ASAP. So the weakness in the NASDAQ, the weakness in the markets, I don't like to short things that are low or buy puts on things that are low. I like to buy puts things that are high, so I buy a little bit out of the money, and they become way in the money, and I get good returns that way.
Sure. No,
So that was my thinking.
Yeah. Well, I tell you, inside Netflix, I mean, that's the best that I can give you as I take a look at it. If I take a look at wave patterns out here, well, here's the other weekly. On the weekly side, there's one other pattern that's out there that, so I've got both the bullish and the bearish side. The bearish side is that price has moved higher and done it with less relative strength out here. And as I mentioned, this weekly, depending on how the week forms, right now, if the week ended today, we'd have a key reversal session, and that would say, okay, you can go ahead and see price pull back to the 118.54, maybe even 109 area, just simply looking at it from this side. But on the other side, is the mere fact that price is moving higher with less relative strength out there doesn't necessarily mean that that's a reversal. You've got to get the bearish candle, which you've got right now, and then you need to see follow through on the next session. Unfortunately, that happens to be not until next week out here. From a wave standpoint, I've got this thing on its way that it's got more strength than it has weakness in it.
Yeah.
So
the other thing with fundamentals is that like Amazon is doing movies, and everybody's in competition with this whole content movie thing, and I just think that I think it's got to a point where I don't see much more upside growth in fundamental either. But that could take a year for that to pan out. Fundamentals take a while.
Well, I'll say, yeah, it could. The fundamental, what you and I are dealing with here right now is the technical fundamental, the most fundamental thing, which is what our shareholders doing out here.
Right.
So, as far as what shareholders are doing, I think the parameters that you and I have established here is, I think we've got it. Now you've just got to wait to see what they're really going to do.
Right. Okay.
All righty.
Very good. Thank you for the help.
Hey, you bet. My pleasure. And get a ride in that Tesla and then report back to us.
Yeah, I will.
All right, take care.
Right.
That was Mike in Pennington. Let's go out to Miami Beach to Jeff. Jeff, thanks for calling. Thanks for holding. How are you doing this afternoon?
Pretty good, Steve. Thanks for taking my call. I'm a long-time first-time. I'm actually from Michigan, from the Detroit area, so I've been listening for a long time. So when you tell your stories, I know all about it.
Now, did you say Detroit or did you say Troy?
Detroit. Actually, Actually, Warren.
Okay.
Detroit, so.
Oh, that's great. Hey, would you do me a favor and hold on through this break here?
Sure, no problem.
Okay, so we're going to come back with Jeff, an ex-Detroiter out here. That's a good thing. And now down in Miami Beach, even a better thing. And we're going to take a look at the VIX Index. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 150. S&P is down 13. The VIX index is trading out at 1759. That's up 11%. We're going back to Miami Beach to speak with Jeff. So, Jeff, thanks for holding. Tell me how I can assist you in the taking a look at the VIX index.
Well, you often speak about the one-day rate of change in the VIX, a signal point being 10% or more. And I'm assuming you're looking at closing price to next day's closing price, and as those two data points you're comparing, just wanted to check in case you're doing a high to high or a low to low or a high to low or something on there, some other data point comparison. Just which data points in the VIX?
Sure, close to close.
Okay.
So, the close from yesterday to where we're trading right now is 10.86. It needs to be 10. It's not like rounding up at 9.9. I'd never included inside my my data set that I think goes back to 1970, whenever the VIX first came online.
Okay.
Is really the set of data points that I use, which is why I have such conviction behind, when you have enough data points out there, then you can rely upon your probability, which is really all that this is, just simply a game of probability. So, as example, yesterday, as the market came to its close, I think the VIX was only up about 7 or 8% out there.
Right. I saw that.
Yeah, and so that was actually better for the bears than it was for the bulls, just simply with the market still moving down and not having that logical high probability level of where you would have a one-day rate of change. So, this is not necessarily a market for bears to celebrate or bulls to celebrate. It's really a market for traders to pay attention to some of those types of signals out there, and to be able to, take your profits off of the table on both sides of the trade. So if the market were to close right here, right now, with the VIX being at 1756 and it being up about just nearly 11%. All I need to really do is come over and take a look at the advanced decline oscillator inside the New York Stock Exchange and see that its reading right now is down below its oversold threshold level, which when it gets down below minus 150. You're at a minus 180 right now. So if it were to, if this is how the market were to close here, I would tell you with conviction, like 98% conviction, that you should anticipate a bounce in the market tomorrow sometime. If not tomorrow, certainly. But I don't know how the market is going to end up.
Of course.
This might end up above the minus 150 level. So it really the assessment in these two types of data points or indicators has to take place at the end of the day.
Okay, I'll check it out at the end of the day. Thanks a lot, Steve, for clarifying that.
Hey, my pleasure. So how long have you been down in Florida? Because Florida is really Michigan's lower peninsula.
Oh, definitely. It's blue collar California down here. I moved down in '89, so I've been here for a long time.
Oh, great. Did you check out any
stories you tell about Pine Knob and about the coffee candies at Saunders? I know all those things. So.
Oh, yeah. Those really, I love the taste of those coffee candies.
Now, did you ever have the ice cream cones at Saunders?
I don't remember those. I don't remember those as well.
So they were so rich.
Really?
They were just over the top. You walk in there, they're cool, and they get the individual ice cream cones you could buy. Yeah. They were just over the top.
Yeah. I know that you can buy that. Now, it's I think, did they go out of business and somebody rejuvenated it, or do you know?
Like I said, I moved out of Michigan in '89, so... Yeah. And I think they did go out of business at some point, but the other thing you get also, too, is you go in there and buy a bottle of, like, a hot toffee or hot caramel, hot fudge for ice cream. You could buy bottles of that and take those home, and that was just over the top, too.
Yeah. No, absolutely. You're affecting all of... Now, everybody inside the Tiger's Den is getting ready to get an ice cream.
Yeah.
All righty. Hey, thanks so much for calling, Jeff, and thanks so much for listening.
Bye now.
You bet. That was taking a look at the VIX index. So as long as we're inside the New York Stock Exchange, just to kind of keep things in perspective here, if we take a look at 2015 specifically, I'll just move this back so that we're just looking at this calendar year out here, just to give you an example. And that would take us, now that takes us beyond this, so we're just going to look at only 2015. We don't want to clutter our thoughts. So each time that the advanced decline oscillator inside the New York Stock Exchange dipped below the 150 level, as an example, your first time down really was March the 10th. You actually came down to that level on March 6th. You then bounced the next day. You came a little bit lower, got to a little bit more oversold, and that was back on, got nearly to the minus 200 level. That was back on March 10th, and that put in a decent bottom, a decent enough bottom for price to go back to the highs. Next time that the oscillator got down here was on May the 6th, and what happened after that? Market went back to retest the highs. What happened the next time we were down here? That was on June the 9th. What did the market do? Went back, in essence, to test the highs. Then you got down here again on June 29th. What did the market do? Bounced for 3 days. Came back down and made a lower price, and while it was doing that, if you take a look at the oscillator was making a higher low. Well, okay, that's another form of a divergence out there. What did the market do? The market went ahead and filled the gap that was out here, because there was a gap down on June 29th. Next time down here into that reading was down on July 27th. What the market do? Went ahead and bounced for several days. Then on August 24th, we saw that one big move to the downside, got down to minus 337 closing reading on that oscillator. That's in that extreme, oversold condition. I can't tell you the number of cards and letters, emails, basically, the people that were bears that were, that were trying to make fun of me and showing you this type of stuff and suggesting, hey, you got to prepare for a bounce and things of that sort. And if any of those traders actually held their positions out here, and there wasn't the New York Stock Exchange where they were short, this is a trader's marketplace. This is what we're in 2015. This is very likely what we're going to be in 2016 out here. So you've just simply got to prepare for it. Next time we saw that oscillator reading get down here was back on September 28th. What do we see? Hey, the market from there went ahead and made a major bottom. That bottom on September 28th, that's one that you and I absolutely need to be paying attention to. 95.90 inside the New York Stock Exchange, and it is on the NYSE that we want to be paying attention to it. And the reason is because that gave us our fourth or fifth Zweig thrust signal. Major bottoms that have never been taken out. Unfortunately, and I go back to 1970, there haven't been, well, there have been a number of signals out here, but the bottom line is we want to pay attention to that low. I don't know if we're going to see it again or not, but we want to pay attention to that low. But the point is, then the next time that the market got down here was on November 13th. Market does what? Makes at least a retracement, moves higher for a period of a couple of weeks out here. Well, guess what, folks? We're back down in this level now. Why would we even think anything else other than the fact that the market is preparing? You don't have to. I'm not asking you to get long. I'm just asking you to anticipate what the market's next moves are. I'm asking you to be, like a great defender. I don't know if Michael Jordan was really a great defender, right? He was the offensive guy. But, who are some of the great defenders out there? Maybe Jeff knows. Maybe it was Dave Bing. Of course, he was a guard, too, so he probably wasn't a great defender out there. But there, what I want you to do is I want you to be great on offense. I want you to be great on defense. And I want you to really be able to anticipate what the market is doing out here. So if the market ends like this, you got to anticipate that there's a bounce coming. It's going to, if we get the VIX index close where it is right now, it's likely coming tomorrow, or at least the next day out here. It says we do a retracement or we head back up to the highs from the December 1st time frame, somewhere between 10.446 and 10.523 out there. So hopefully that assists you. Now, I mentioned that Golden Cross, and I was going to try to do it during the breakout here, but the way that my system is behaving, I'm actually enjoying the mere fact that I don't have anything firing off that is creating a problem for us. So, and oh, by the way, if I go back and take a look at the oscillator readings for everything else, the Dow, well, really just the Dow itself, the Dow is really in an oversold condition as well. The NASDAQ composite, not so much. The 50-day, that's one thing that Jeff and I didn't talk about. If you go back to the VIX index, key level to be watching today inside the cash VIX is going to be 1703. That's your 50, the so-called 17. That's your 50-day exponential moving average out there. And this is where it's really not good for the only thing that becomes good for, I haven't mathematically tried to figure this out yet. You can do it. Which would be to take a look at yesterday's close. You can do this. I'm not going to do this for you on the air. But 1584 was the close. If we were to close at 1704, do we still have a one-day rate of change in excess of 10%? I don't think we do. So what the bears want to see is some close above 17, just for some additional selling pressure, and it to be less than a 10% one-day rate of change out there. That would then say, hey, guess what? That bounce that we're anticipating, you might have to just delay, for a day out there. Potentially delay for a day. Okay, let's go back and take a look at what else. As I say, I really just jumped into the catbird seat here, so I didn't get a chance to really evaluate much in the market. So we're just doing this on the fly. But if we take a look at let's take a look at gold, see what it's doing. Trading at 1075 right now. Let's go take a look at the GLD. Let's go get some volume matrices out here. You've got the GLD trading up 30 cents. Let's take a look. So we know that in the case of gold, if we just simply use the GLD as an example, up with a nice 10.6 million shares. That was on December 4th. Yesterday pulls back with 4.3. Today, 2.7. I don't know what the straight line math is on that. I'm going to guess about 3.5 or so million. So and really today's just an inside day. An inside day, says, you know what, you can go down and move a little bit lower even tomorrow. If we go back to the gold contract itself, let's go see if we can find some market profiles out here, see where there's levels of support. I think that they are above us, not below us, but maybe there's a new profile. Let's see if this thing does, if it populates for me. Again, I got a little bit of a speed issue going on here. There we go. Okay, so the answer is, we've got a weekly profile inside of gold. So the level, that's interesting, because I gave subscribers a target area this morning, and actually had nothing to do with this weekly profile out here, but it happens to be roughly the same number, 1060. I don't remember if I used 1060 exactly, but 1060 is likely the area where gold will pull back to. Now, the number that I was using, we did not want to see it close below that area. Now that we've got that tool, which I use, and this tool here, the market profiles, that 1060 level is important. It's important just simply to tell us whether or not, if it breaks below there, then it says it goes back and it tests the low from December 3rd out here. Tops in markets take time to form, and guess what? Bottoms in markets, bear markets like what gold has been in, take time to form as well. And it's possible. I know this is hard and this is I'll take the other side of the trade that David is on, because I listened to his show and we spoke briefly, and I know that his thoughts are that the dollar's moving higher and gold is going to head lower big time. But I said the 1061, okay, but 1061, 1060. My take when I take a look at gold, I can't tell you how it's going to happen. I just know that it is likely to happen. And that is that gold is making a major bottom out here. I see we've got Z inside the den, so I haven't seen him for a while, so welcome back, and curious to hear his thoughts. But my work suggests that what gold is doing, is not just maybe a tradable bottom, but like a major bottom out here. So it is something that you and I want to keep our eye out on. Now, I will also tell you that my work in going to take a look at what the commitment of traders are doing is they've been getting net short the dollar. Now, again, after last week's move, I really got to take a look at what their COT data what it looks like as of today's close, and I can't do that till over the weekend, really, or late on Friday. But I will tell you, and those that listen to the show know that even a week prior to that, or 2 weeks prior to that, as they were building that position, I had mentioned that. So, they obviously see something that we don't see or anticipate out there, and that's why they call them the smart money. So they're still, at least as of last week, they're still trying to get. They've been getting net short the U.S. dollar. So they already knew that, or they believed that the way that the market was going to respond to Mario Draghi is the way that the market, in fact, did respond. And they are preparing for a bottom. The type of bottom that we saw, they are preparing. There was a big bottom in 2001, 2002. That's the type of bottom that they are getting ready for. So maybe it's inflation that is going to start rearing its head. I don't know what it is, but that's the type of position that they are taking out there. In any event, as we take a look at what's going on inside the euro, let's go take a look at it. You got the euro Japanese yen trading just slightly higher today, but what it's really not doing is really not backing off. And as you and I talked about yesterday, both inside the euro versus the U.S. dollar, as well as the euro versus the Japanese yen out here, the key level to be watching is a close above the close on Friday. Is that Friday? December 3rd? No, that was Thursday, December 3rd. That closed, by the way, 134.07. Or, from a more conservative standpoint, 134.50. You see that? And that says that currency pair is headed to 136.69. And I can tell you that the U.S. stock markets are going to have a real hard time going lower if that currency pair, the carry trade, is headed higher. Just very difficult. Too much liquidity. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. We've got the Dow. She's off 158. S&P is down 12. Let's go take a look at some intraday charts out here. See what was going on. Let's specifically start out by taking a look at the ES Mini. It completed a 1-to-1 A to B equals CD to the downside. That's after making that price relative strength divergent pattern to the upside, as well as a seventh wave move out there. And that was yesterday. It actually came in on Sunday evening when that or Sunday, early Monday morning, actually, 4:30 when that pattern began forming out here. So we've had a Gartley buy pattern that has been confirmed out here inside of the ES Mini. Big old bull sash candle out here. The key level that the ES is dealing with on the 30-minute basis is its market profile. So the number to be watching for right now, I'm going to switch over because this thing is really slow out there. It's was having all my trouble inside the Ninja charts. But let's move over and take a look at that 30-minute chart out here. Let's do it a different way so I don't have to mess with all that. Oh, come on, work with me. Let me see here. Give me a moment now. Let's move it right here. Okay, so we're going to take a look at the ES Mini. We'll clean up the chart. Let's go to a 30-minute time frame because with that Gartley buy has 5 potential outcomes. So we know we had the A to B equals CD to the downside. Let's take a look at the retracement. Low from about 2:30 in the afternoon on December 3rd to the high out here at about 4:30 in the morning. Let me turn that off. Sorry about that. So all those profiles, but I went to a 30-minute chart. That just simply messed with Texas out there. So now, let's take a look in from the low to the high. We can see that the retracement this morning was the 0.786 level. So you got your A to B equals C to D. Completes it. Nice big old bullish engulfing bull sash candle out here. Now, let's try to put up the market profile. So, darn, let's put up a 30-minute. Let me turn everything else off so it doesn't totally discombobulate. And we're also going to come back and take a look at the retracement now because there's 5 outcomes of any type of Gartley pattern. First outcome is going to be the dead cat bounce. That's at 0.382 retracement from high to low. So now we're going from the high on Monday morning early to the low this morning. Let's actually get the right number out here, or let me just get to the swing point high and the swing point low. There we go. I think we're pretty close. So we can see that we've already had that dead cat bounce. That was you got slightly above it, probably about a 50% retracement during that 30 minutes between 11 and 11:30. The key level here to be watching for. So we've got now our market profiles. We're going to use those as a area of if price can close above them, which is trading at right now on a 30-minute basis. That number is 2062.75. Don't pay attention to the 0.68 on my screen. So 2062.75. If we see the ES close above that, then that says you are likely to hit up to the 2078 area. But the reality is it could be an A to B equals CD to the upside. It could be another Gartley pattern. This time it could be a Gartley sell pattern. This was Gartley buy that set up out here. The potential Gartley, the potential A to B equals CD to the upside, could actually give you a price projection of about 2080. So at 2080, that becomes your 1-to-1 A to B equals CD. At 2078, that becomes your 0.618 retracement. So it would really be that range, which gets you all the way back up to the highs out here where the market started to really careen to the downside. And that was really last night, 4:30, where it made a nice little high out there. So that's what's going on inside of the ES Mini. If we take a look at the NQ on the same chart, it also completed a to B equals CD to the downside. Its retracement, though, looks like it was only maybe about a 0.618 retracement if we go from low to high, and voila, it was a 0.618 retracement. So if we take a look at where it's at real quickly here, because it's probably the NQ that gives us the biggest message. You know what? The NQ, this puppy looks like it wants to get all the way back up to its highs, 47.30, once again. Folks, stay tuned. David White is up next. Have a terrific Tuesday, and I'll see you on wonderful Wednesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.